Well, good evening, all. Ira Epstein, and here we are with your SPDR ETF stock market wrap-up, and this wrap-up is for one wild end-of-the-month trading day for this April 30th, Tuesday, 2024. So we're going to start out tomorrow with a lot of economic data. We get the Mortgage Bankers Association numbers at 6. At 7:15, the April private sector numbers at 7:15. S&P Global Group came out with their U.S. final manufacturing numbers that will be out at 8:45. Then the ISM is going to come out with their April manufacturing index. Construction spending is going to come out for March at 9 o'clock. We get the Fed with its statement coming out at 9 o'clock. And then there were earnings in the market. So for the earnings today, Amazon is the stock that was up. Everything else of these big names was down. Were any of the numbers terrible? Probably Starbucks. I mean, when you really think about it, I'm watching even what Amazon said. Amazon's up because it's AWS, it's Amazon, their cloud service took off to the upside. And the growth there is really starting to pay dividends. But they're going to be spending over the next decade or so $150 billion, you heard me, billion, building this all out for what they're doing. But people can go in, they can rent time, they can run on Amazon, different things that they find. This is very interesting. But when you go to Starbucks, I mean, coffee prices have taken off. Labor costs have taken off. I saw the CEO. He says, no, they're still seeing about the same, but the sales are down, which means the penny pinchers are starting to pull back a little bit. And that's exactly what Amazon is saying also, that they're seeing that they're selling a lot more everyday items than they are the specialty items. That's important. As for AMD and Supermicro Computer, I think they're hitting their numbers, but takes time for all this AI to kick in. All right, so I'm going to take you next to the chart action of the day. Behind me, I want you to look. Do you see anything in green? I don't recall me doing a show with you where everything was in the red, yet that's what happened today. And part of this has to do with the labor cost numbers that came out. And these labor costs set the market for a jolt. They looked at where they went up and why, and benefits jumped rather dramatically. Benefits don't go away. When you have an employee that's vested, he gets benefits. And if you have an increase, you're stuck with that increase. Wages can go from whatever your floor is up and down. You can hire people at better prices, whatever that means, higher or lower, your definition of better. And that could be more variable. But you're not getting away from your benefit costs. And the market didn't like that at all. The market doesn't like when we take a look at everything else we've already seen last week. All the data still points to a strong labor market, and we need reasons to see it not strong. Now, the ADP number in the morning might give us an indicator. Is the strength still there? Is it starting to show up that it's weakening a little bit in the private sector? I only mention that because the Fed Beige Book a week ago talked about certain regions. They're not hiring as much as they were. Well, we'll see what that means, you know. I'm also hearing people finding it harder to get jobs. I'm seeing that. I'm seeing that we have something called Nextdoor in Chicago, and I'm on that site looking to my neighborhood if people say anything, what's going on. And people, hey, do you know somebody that can help me? I'm looking for work. Why is that person there if the jobs are so easy? So just the point that I'm making with all that. But as you know, high interest rates take a long time to work through the economy. Remember that. And they are restrictive. Remember that. The 5-year note today got over 2%. That's a big deal. We just had that huge auction a week ago of these 5 years, and it didn't. They thought maybe it would cross 5%. It didn't. But as Rick Santelli so well said on CNBC, it will. You wait. And it did. You were right, Rick. And I happen to know Rick. I've known him for I don't know how many years from on the floor of the exchange. So you put this all together and you say to yourself, okay, we're in the heart of earnings season. We have to get over a hump here. And what are the probabilities of a Fed rate cut? Well, if you go to the CME Fed Watch page, and it's a great tool. Tells you what traders currently think. Is it right and wrong? It's a measurement of today and to a degree a little bit in the future, because it does go all the way out, and it gives you an idea what option trades are setting themselves up and where they're looking for in the market. There's now well under a 50% chance that the traders think September. So we're getting down to one or none. One or none. Higher for longer, now one or none. And that's where I think we're at this point. The longer you go with strong labor markets and high inflation without breaking down and trending, you're not going to get cuts right in front of the election. So September's your cutoff, probably. I think most people would tell you that. And after that, if warranted, they can go. But remember, in December, they don't have to go a quarter point. They can go a bigger number if they had to. There's many things that can happen. Now, MasterCard is a surprise as to how it's coming down if the consumer's buying strong, if people are taking all these vacations. This work says they're not using MasterCard to do it, or somewhere the profitability isn't right. It keeps coming down. It's in a downtrend. It's down to its first major number, the 100-day average. Now, if you think about a 100-day average, it's almost half a business year. So it is an important number to deal with. I always look to see where that's at and where it ties in with the Bollinger Band. So between the 452.79 and 448, whatever the number's going to be in the morning, because it'll change when we open, that's where I'm looking for the first major support to show. It can start right here. It need not reach there, but you're in a zone. That's how I look at it. You're in a zone for support. If it doesn't pay attention, it doesn't pay attention. But that's where you're at. And additionally, you're oversold. So would you get me interested in going short down here? Not on your wildest dream. Doesn't mean I'm right, but that's how I look at it. eBay, did we not mention yesterday? You got to the point where, as far as I'm concerned, I carried this because I wanted you to see. We thought it could come out to the upside, and I said that here. It did. As far as I'm concerned, now you're waiting just on the earnings. But that market looked to me pretty darn good and profit to be taken. Tesla, 15% up yesterday, down 5% today. So you grab back a third and just think of where you went. You hear me say this all the time. Getting up to a Bollinger Band and a major moving average at the same time, often where the pros take money off the table. And that's what I think was going on, and now you're back into the Bollinger Band. Are we trending? We aren't. You've had a vertical price rise straight on up. Markets, that's like standing on a pole. Eventually it starts wobbling and it falls down. Now, how many times do we see these fabulous artists that throw plates and they do this, and eventually one falls and we all go, oh, and then they start over and they do pretty good. In FCX, okay, copper today got hit about 15 cents a pound. It's had a vertical rise. Now it's pulling back to support. Let it build a little bit here. I'm a very big bull on this stock. It's a question of where to come into it, and I haven't seen that yet. I see sideways churn in the market. In UGA, the gasoline fund, I don't know why crude got hit so hard today. The stock markets around the world were down. I haven't seen that Hamas has accepted anything from Israel's offer. I know Anthony Blinken is in Israel tonight. I'm sure they're talking about Gaza aid and everything. And if you're watching the U.S. pier that cost us $320 million to build, supposedly, that's getting ready to be deployed, actually used probably in the next 2 weeks. So that's really good news for the people of Gaza. But how do you negotiate with Hamas when Netanyahu comes out and says, whether you take the deal or not, we're going into Rafah after this to wipe you out? I don't understand that, okay? It's a problem for me. If you're Hamas, you know they're coming for you. You don't have to say it. But Hamas is also wrong. They think they're going to get Israel to back off, that they have world backing them. And because of that, and the U.S. colleges, all that's going on, the backlash is so strong that Israel will not come after them. Nonsense. You got it. When you did what you did October 7th, you unleashed the tiger. You knew what you were doing. You knew they were coming. There's nothing left of the cities. XLF, lower highs, lower lows. Everything just coming down as this is happening. And by the way, I'm only saying that on oil because I can't figure out why it broke. All right, you would think that if there's no deal, it goes up because of the uncertainty. But maybe the market's looking right now in oil as, gee, maybe the economies are starting to weaken and they won't need things as much. You can toss it either way. You went up to the resistance in the industrial sector. You did close over the 18-day average. You threw out the first bullish signal. So if traders were buying today at that 18-day average, they most certainly don't want to see this market under the 122.60 level. That'll cause a problem for them. In RSPD, you went up to where the 100-day average and the 18-day average is. You got over it for one night and came right back down. You get over that again, it's going to look interesting to me. I don't know what to do with it. This chart is a real problem chart. In XHB, I love the builders. I think they're in such a beautiful position. I'm looking today and they released the 20 Schiller Home Index. You're up 8% year over year in home prices. Month over month, they're holding. They're not backing off. These were February numbers, admittedly, but they have the power, and people are saying, I need a home. And as such, not everybody's going to go to Pulte and build $1 million homes. There's lower priced homes, and those builders are starting to fill their books again. Even at 7.5% mortgage rates, you can always refinance. The key is if you're going to get into the home market, what are rents running? And you got to compare the two. For some people where you live, the rents make a heck of a lot more sense than owning a home, paying taxes, paying insurance, all the other things you do with the home, maintenance, I can go on and on. It's not what you think it is. It's an expensive undertaking. Ask anyone that owns one. But you can also say you build wealth. And for many people, that is the one thing they build their wealth in, generational. And it carries over. In the energy sector, lower highs, lower lows down here. By the way, on that theme of generational, you could also take that money and put it in the stock market. And let's assume that you make, on average, over a 10-year period, 7% a year, making this up, okay? And it compounds. It's not bad in itself. Do you have the discipline to do that? Ride out the bad years with the good years? Don't know. GLD. Higher high, lower low, beaten up, oversold. I don't think inflation has changed. So I understand this market's looking at a strong dollar. It's looking at high interest rates, but it's been looking at them, and you had that exact story up here. So I think this is a correction of a vertical price move that is still hanging around the neighborhood of that 18-day average, now down to the Bollinger Band. Not a market that I'm seeing anything that excites me on yet, but if it starts back up, I want to be with it. I don't want to be with it here. Silver's still in a bear trend and oversold as can be. And in the copper, my rule that you don't buy upper Bollinger Bands, I'll stick with. Today, the market down 5% almost. As you can see, 2.25 lower, and it's like I said, in the futures, they got hit big, 15 cents lower. Then we get over to the interest rates, all right? They're oversold. My work, it's in a downtrend. It's clear as can be. You're not a buyer. If anything, you're a seller, but it is oversold. Bye-bye. I can wait for the setups. In UUP, you know I did a special report to be long the dollar, short the euro. But putting the trade and staying with it has been a very difficult task if you're a chartist. Fundamentally, I don't see anything that's going to stop that trade. You can see the euro's down, the dollar's up over there. You put it together, you try to come up with a game plan, and that's what I do with you first things in the morning. So in the mornings, what I try to do with you, we go through charts. And the charts look like this. I've wanted to show you what the charts actually look like. So you're going to have your Bollinger Bands. If I have window envelopes, they're going to be on the chart. I plot another moving average. It's tied to the 18, by the way, the 100, the 200, and got my slow stochastics. And from there, the game plan begins. And when you put together the game plan, what you're trying to do is get the market to run with that. And in the video, I go through this. We'll look at daily charts. We'll look at weekly. We're going to try to come up with the day's fundamentals. So there's a new video Monday through Friday mornings, no holidays included. I will tell you, buy here, sell there. There's 40 plus charts, a mixture of all the major areas of the market plus individual stocks. I'll try to do, going forward now, bonus videos each week. So that'll start no later than next week is my opinion. And as you put this, we try to come up with it. So you get special access, by the way. I don't know if you're aware of that. You know, when I do these free reports, and for some people, they are free on the website. But my special reports, you only get 3 views a year. Yours are free all the way through your subscription. After that, they're paying almost half to see it of a subscription price. The idea there is subscribe. That's what keeps all these videos going. You go to iraepstein.com under the word research. It's all there for you. You can move your cursor to the top here. It's waiting. I'm Ira. You have yourself a great evening. I can't wait for tomorrow. We'll have a heck of a lot to talk about. Take care.